Hi, this is Gerald Salenti. It's Thursday, June 29, 2017. And here are some of today's trends in the news. On the market front, over there in Asia, everything's up. Over there in Europe, it's down. And here in the States, it's down. It's down pretty good. And oil, boop, up a little bit. Gold down a little bit. So what's going on? Well, the tech stocks took a hit today in the States. And there's uncertainty on economic news as we're looking at the numbers. The GDP numbers officially came out for the first quarter. And of course, now we're ending the second quarter. And the economy grew the grand total of 1.4%. Yeah, the Trump rally equals an Obama bust. Same kind of slow growth. And on the job numbers, more people file for unemployment than they anticipated. Not by a lot. But that's the trend. There's nothing hot going on. It's a lot of hot talk and no action. And as we said, hey, what's the headline of Tuesday's Trends in the News? Huh? Here it is. Market warnings flashing, and they're flashing. Again, we believe we are in a critical area, a time of caution. This report just came out today. President Trump's economic agenda got a thumbs down from the International Monetary Fund on Tuesday, today. On the oil front, yeah, oil went up a little bit today on the news that, of no news. Stockpiles went down a little bit, but Libya, they're pumping out now, they're saying 1 million barrels a day. Before Obama ordered the slaughter over there, along with Sarkozy, Clinton, Samantha Power, and Susan Rice of Libya, they were pumping out 1.65 million. And a little more oil is coming out of those Nigerian fields as well. So again, oil is in this trading range. You don't see it going much further one way or another. On the gold front, gold went down a little bit because there's speculation out there that interest rates are going to go up over there in Europe, up in Canada, out in the UK, and here in the USA. Remember, the higher the values of the currencies, the lower the price of gold. But here's what's going on. I'm going to go back, of course, to yesterday. It's Financial Times. Big story. Draghi's sunny economic vista puts common currency on a high. The euro hit a 2017 high against the dollar. And the German government bond prices fell sharply after Mario Draghi, president of the European Central Bank, delivered a bullish assessment of the Eurozone's economic recovery. Today, Mr. Draghi took his first step towards indicating the ECB monetary policy will become less accommodative in 2008, according to the chief Eurozone economist at Unicredit. That was yesterday. Confusion today as Carney and Draghi struggle to clarify stimulus exit. Carney, of course, is the con man, carnival man, just the head of the British central bank. And both Carnival Man and Draghi, both members of the Goldman Sachs gang. That's right. Before they became heads of the central banks. It's all one rigged game. You know, Draghi's the guy, by the way, that got the Greeks into the Euro group. Yeah, when they weren't prepared for it. And look at how wonderful they're doing over there in Greece when he was a member of the Goldman Sachs gang. European division. So the confusion. End of cheap money leaves central bankers lost for words. They're changing the story. They're going back and forth. The market gyrations were compounded by Mark Carney, Bank of England governor, who was interpreted at the same forum where Draghi was as advocating an interest rate rise yesterday, having rejected it in London as recently as last week. So they're saying one thing and then saying another thing. Goes back to gold let's stay on this for a second. If the European Central Bank raises interest rates, the United States raises interest rates, England raises interest rates, the values of the currencies go up. The higher the values of the currencies, the higher the interest, the higher the carrying cost for gold. And that puts downward pressure on it. Again, that's on the economic front. However, there's a geopolitical front, and that's not going very well as we look what's going on in the Middle East. Again, here we go. Signals on stimulus, Royal Global Market. 2 European Central Bank officials left investors with mixed impressions over the past 2 days about when the ECB would reel in its 2.3 trillion euro bond buying program. And the chiefs of the Bank of England and the Bank of Canada both suggested they'd be reducing stimulus. So we're getting mixed messages, but we see interest rates going up. Now, another important factor. What keeps the stock markets going up? What keeps the Ponzi schemes going? You know, cheap dough. That's right. Here, listen. Again, I'm not making this up. This is from the Financial Times. Something we've been saying all along, by the way. But finally, they're putting in the proper language. European central bankers learned this week that any move towards normality in money policy, that means raising interest rates so little savers like us don't get screwed when we put our money in the bank, will require exquisite communication amid jittery financial markets that have long gorged on the abundance of extremely cheap money. Jittery financial markets, a bunch of gamblers, a bunch of those 8 people in the world that have more wealth than half the world's population combined. Oh yeah, those jittery financial markets. So the big banks can't get bigger and the rich can't get richer. Oh, those jittery financial markets have been gorging on the cheap money, feeding themselves, and we're paying for it. Hey, what happened? Merger and acquisition activity and stock buybacks. Yeah, stock buybacks are down about 13% this year, but still going strong. And the merger activity? Hey, here's another one for you. Staples to sell for $6.9 billion. Yep, Staples, the stationery store that put all the other little stationery stores out of business, like the Home Depots, put the hardware stores out of business. We used to have acts in place like the Sherman Antitrust Act, Clayton Antitrust Act, Robinson-Patman Act that prevented the greedy bigs from stealing all the dough and make you a worker in Slavelandia. That's what it's turned out to, not only in this country, worldwide. Moving on. China's debt surpasses 300% of GDP. Hey, all that cheap money, huh? Yep, just keep printing it out there, keep making that bubble bigger. And as we said, we see a major correction coming. You look at these numbers. Household debt to GDP ratio hit an all-time high of over 45% in the first quarter of 2017. Data from the Institute for International Finance showed that global debt reached $217 trillion in the first quarter of this year, or 320% of gross domestic product. Hey, look what's happening over there in Illinois, huh? Yeah. Them lawmakers, a bunch of you-know-whats, lawmakers. What do they have? How much debt they can't pay off right now? Here it is. $15 billion in backlog payments and $250 billion in pensions that are coming due that they can't pay. Lawmakers, the country's run by a bunch of political imbeciles, the same people you couldn't stand in high school and college that wanted to be class president and head of the student council. Big egos, man, and nothing else there. Oh, we'll fix it, elect me. Look at the crap, whether it's in the United States or in France. It's one big comic show. Hey, look at this picture of the new president and all the little boys dressed up in their costumes, in their old-fashioned military drag. Look at this disgusting spectacle, and we the people pay for it. Red carpets everywhere. Roll them out for the clowns. Look at this red carpet. What a joke. Let's walk down the red carpet and don't forget to salute. Look up to your politicians as they give it right up to you. Hey, on to some other economic news here in the States. Regional malls across the country are feeling the pinch. Newly released data, vacancy rates went from 7.9% in the first quarter to 8.1%. Hey, but an old story, the pull on the malls. Amsterdam on steroids. Las Vegas dispensaries brace for Saturday's start of recreational sales. Again, history before it happens. We've been talking about this in the Trends Journal. Go on to the last issue. Cannabis Nation. That's right. Yep, here it is. Here's the cover. Here's the issue in detail. But go beyond that one and go back a while. Reefer Money Madness right here. All in the Trends Journal, history before it happens. On to some international news, more good news. U.S. attacks ISIS prison, killing about 57 innocent people, civilian prisoners. But that's all right. They're only Syrians and they don't count. And going on, the Let's Hate Russia propaganda never stops, even when they're telling lies like this one. A costly retraction for CNN, the Cartoon News Network, with Mouse Blitzer and all the other little boys and girls. CNN was forced to apologize after retracting a story on the website that a Russian bank linked to a close ally of President Trump was under Senate investigation. The high-ranking journalist at the network resigned. What journalists? A bunch of prostitutes, little boys and girls that put out for their Washington Johns and their corporate whore masters. Let's call it what it is, a spade a spade. And CNN producer admits Russian narrative is bullshit. Not my words, his. You know that. It's mostly bullshit right now, like we don't have any big giant proof. And that was according to John Bonifield, who works for CNN, the producer on CNN Health. He's asked, why is CNN constantly like Russia this, Russia that? He said, our CIA's doing shit all the time. That's right, no shit. We're out there trying to manipulate government, so of course we are. I think the president is probably right to say, look, you're all witch hunting me. He goes on to say, our ratings are incredible right now. It's a business. People like the media has ethical It's all nice, cutesy little ethics that used to get taught about in journalism school. You're just like, that's adorable, that's adorable. This is business, Bonifield says in the video. Those are the facts. But the facts keep getting distorted. Cyber attack hits Ukraine, then spreads. Cyber attacks spread across the globe. That's the story. They bring it to the Ukraine. Ukrainian officials pointed a finger at Russia. Although Russian companies were hit by the cyber attacks, including Home Credit Bank, one of Russia's top 50 lenders. The attack also affected Ivrat's, a steel manufacturing and mining company that employs about 80,000 people in Russia. But they keep selling the propaganda, as does the toilet paper of record, the New York Times. The attacks on Tuesday against targets in Ukraine, which spread worldwide, appeared more likely to be the work of Russian hackers. How's that for more prostitute? Let's hate the Russians. It keeps going. Cyber attacks may have been aiming for chaos in Ukraine. Yep. But Russia was seen as the prime suspect because it has been engaged in overt and covert warfare with Ukraine. What overt warfare? Never shown any of it. Yeah, the fake tanks you had going over the borders, huh? But they blame Russia. A Russian role has not yet been proven. But we don't have to need any proof, just like they don't have any proof that the Russians hacked into the DNC. Yeah, we don't need any proof. It's our belief. And we believe in a bunch of lies that Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. So here we got it. The markets are going down. There's a lot of pressure. The latest IMF report downgraded American growth. We're seeing interest rates going up. That's going to put downward pressure on gold. Oversupply of a lot of products, keeping inflation low. A wild card could change the game in an instant. That's why nobody can forecast the future. You can't predict it. There are always wild cards. And there's no greater wild card than playing the trump card. This is Gerald Celente, and that's some of today's Trends